All right, let's jump right in. And today looking at SPY, we were down 0.59% and we did break that support below 502 and we're getting very close to filling this gap at 497. Now we're also on our third day below this Bollinger Band. And when we look at the QQQ's chart, I think we have a better understanding of what SPY is likely to do, which wasn't going to be a deep bounce and then a gap fill. It is now looking more likely that we've already gone low enough to fill this gap, and then we are going to get a very nice relief bounce. But remember, we are still looking at lower highs and lower lows, which means even if we get a very deep bounce here, we could still continue to make lower lows and go down into the low 490s. So be very disciplined. This is a volatile market, and I will remind you, volatility does work in both directions, so it is still possible to get very large up moves, especially on those day trades. You're going to see wild whipsaws, and if you are day trading in a volatile market, it is a very profitable market as long as you're being disciplined and taking those profits and not overstaying your welcome. You could trade both directions. I still think this is a market where both bears and bulls are making money. We're not getting crazy enough down moves where the bulls are too scared to buy the dip, and that's why you're still getting plenty of bounces throughout the intraday sessions. So looking at SPY, I think we have very little downside. We could fill this gap before going higher, but then after this gap fills, if we do fill the gap now instead of later, I do think it's going to favor the buyers, and I do think we're going to get a very nice bounce in the indices. One other change from the recent topics is I no longer think this has to just be a stock pickers market. I myself am dialing back on the stock pickers market mentality, and I am going more indices focused because, as I told you before, that's my bread and butter, and we're getting plenty of volatility to get plenty of trades out of the indices, and they are behaving very technically sound. So just focus on these levels. We have 497 and 502, and if we bounce from these zones and we start to get that oversold bounce, we are looking to push all the way up to 507 and 511. On the NASDAQ 100 triple Qs, we were down 1.22% today, and we did very close to what I drew, which that we would get a lower high bounce and then come down here and fill the gap at 425.7. And this is why I think we're not going to go too much lower in SPY, because these are very heavily correlated. So now that we've got the downward move in the triple Qs, you can see that there's not a whole lot of more downside with this oversold condition 3 days below the Bollinger Band. So I think there's a very good chance the triple Qs can only go just a little bit lower at best, and then I think we're going to see a very sizable bounce that's likely going to take us all the way up towards 435 to test the breakdown. So it's very hard to suggest being bearish here. The triple Qs look like we have very little downside before a very large bounce, and based on my analysis and everything I see in the stocks that move the triple Qs, I think this is a very good chance. And this is why you need to be very careful if you're going to be a bear down here, because that's a lot of upside from the gap fill. If we do go to 435, that's over a 2% move to the upside, and that is not a move you want to be caught shorting. So watch this support between 423 and the gap fill at 425, and from there we're likely pushing to 434 to 435. On the Dow Jones, we were down 0.14% today, and the Dow Jones has this very critical support at 377. And as you can tell from the arrow, I do think this support is going to hold. I think this is a very strong support that is at least going to give us a small bounce, which is likely going to take us higher towards 383 to 385. Now, once we get that bounce, we need to see if we're going to get a lower high rejection and break support at 377, or if we're going to start making higher lows and higher highs. And this was the pullback in the Dow Jones before we continue higher. And do not forget, we have this gap to fill up here right around 395. So do not rule out the possibility we just go straight higher and start filling that gap. And if we did that from 377, that's almost a 5% move to the upside in the Dow Jones. And again, that is not a move you want to be caught shorting. I think across the board, they're at some very critical support zones and due for some very strong bounces, even if those bounces do only go to a lower high before we continue a downtrend. Again, I'm not making any predictions on breaking the downtrend. I'm simply saying do not rule out the bullish scenarios. Zooming out, we still know we're in a bull market, and this could just be a pullback still within a bull market. On the Russell 2000 IWM ETF, we were down 1.06% today, and we did get a small bounce to that resistance right around 196, failed to break above it. So with that rejection, we still have the possibility to come down lower to the 200 daily moving average, which is going to be that support right around 190. So 190 is a possible scenario, but it doesn't mean we can't bounce first. And we are very oversold now 4 days below the lower Bollinger Band. And the small caps have been very rate sensitive, and rates were coming down today. So do not rule out the possibility the small caps could be bouncing soon, especially if you go to the weekly chart and look to see that the small caps are currently sitting on top of the weekly 200 period moving average, which is a very strong support in a typical bull market. So watch 193 closely, and we'll add that to the daily chart as support because it is a weekly chart support, which is going to be very strong. And if we break 193, we're looking for the next strong support at 190. On the ARKK ETF, we were down 1.44% today, and we're getting very close to the next support at 42.4. We still have a gap to fill up here above 44.2, and we still have a downtrend as long as we're trading down below 40. 47 because of that triple top rejection. So if we do bounce, we're still looking for a lower high, which is likely going to be right around 45.7 or 46. If we can't hold that support at 42.4, we go lower towards 41. And then below that, we have another support at 40. And I do think Tesla is also due for a bounce, which should help ARKK bounce as well. And that's likely going to be enough to at least fill that gap at 44.25. On the VIX, we were down 0.92% today. So a lot of you have already noticed that the VIX was going lower today, even though the S&P 500 was going lower as well. And that is typically a bullish divergence telling us that fear is leaving the market, even though price is going lower, which could mean a little bit of an overreaction through the sellers. And we're not seeing that same panic in the VIX. So I still think the VIX is going to continue to crush down towards 17. And that's going to give us that relief bounce in the indices, which goes hand in hand with what we looked at on the SPY and the triple Qs and the Dow Jones as well. So I think in the short term, there's a good chance the VIX continues to crush. So watch that very closely. And remember, while the VIX is elevated up here, it's still going to remain a very volatile market. And volatility does work in both directions, so it doesn't guarantee the market has to go lower. On Bitcoin, we're currently trading just above 61,000, and we're at this very critical support that I told you if Bitcoin cannot hold this support, it is likely going down in a very quick fashion to support at 52,000. So this is what I like to call bounce or die, because if Bitcoin does not bounce here with this triple top look and a break of support, we are going to see a liquidation of the Bitcoin leverage bulls, and they are going straight down to 52,000. Now, if we do hold this support, we can push back to the top of the range, which could put us anywhere between 65 and 68,000. But again, I would not be getting overly bullish with this chart because it does look very weak, and we clearly have a lot of sellers up at the higher prices pushing us down. And if we break support, it's going to move very quickly. So if you are a Bitcoin bull, make sure you're managing a risk around the support zone. On Nvidia stock, we were down 3.87% today, and we're finally getting that move that I was looking for down below 857 just to close this gap at 823 and test the rising 50 EMA as support. So if I were to update this arrow, it would still look very similar, but just a little bit lower, and then a continuation of that push towards the brand new all-time high prices between 994 and 1032. So I still like the projection, and obviously price is now agreeing with it because we did get that breakdown below 857. But just keep in mind what I told you, if we don't find support at the gap fill, and this is a double top rejection below 857, this could get very ugly, which means it could still go down to 780 and 740. So I just suggest managing a risk very well right around the 820s, and if that breaks down, you know we have significant more downside. However, there's no guarantee it will break down, and I actually favor this scenario that it doesn't hold as support and we continue to push higher before the earnings report. Remember, earnings in Nvidia is only a month out, and we are kicking off earnings seasons in big tech, so things are going to get very interesting. On Tesla stock, we were down 1.06% today, and we still are holding this support right around 154, and we're in that very oversold condition 3 days below the lower Bollinger Band. So I still think this is a very simple trade from 154 all the way up to the gap fill above 161. And once we fill that gap, we have to see if the bulls can push all the way up to 167. And if we break 167, we're still looking for 173. If we bounce to 161 to fill the gap and get rejected, then we're looking for a push back down towards 154. And if we break that, we have support between 151 and 146. So remember, this is still a bear trend. We have the lower highs and the lower lows, but in the short term, I think we're due for an oversold relief rally bounce. On Apple stock, we were down 0.81% today, and Apple is getting a very nasty rejection from the high up there at 177, and it is a lower high. So if we do come down here and break the previous low and the support at 167, we will be looking for a push to 163 before earnings. So if we did get that bear breakdown, we would start to push down lower, and then we would likely start to bounce into earnings. And there's a lot of ways this can work, but one thing I want you to pay attention to, this is still a very low risk bull entry, and we are still in a bull market, and Apple has done a full 15% correction. So for the simple fact that this is Apple stock going lower on now reducing volume into a very low risk support zone, in my opinion, that makes it a very easy to manage long trade, but obviously do whatever you're comfortable with and just manage your risk right there, right around 167 and 169. If we break that, we go to 164. And again, I think that's another low risk opportunity, but that is the definition of trying to catch a falling knife. So if you're not comfortable doing that, or you don't know how to manage your risk doing that, then just don't do it and wait till we reverse the downtrend. So jumping back over to the S&P 500, I no longer think this has to just be a stock picker's market. We're going to be getting plenty of volatility here in the indices. And just remember what I told you about the oversold bounce, that even if we get a strong bounce, which is a very good chance from these support zones, it doesn't mean that we have to go back into a raging bull market. While we have this pullback, we are still making lower highs and lower lows until we're not. So manage your risk according to that. I know a lot of you are still talking about buying call options and things like that, which is very risky while you're pulling back, because anytime you start to pull back, it can always turn into something bigger or a deeper correction. That goes back to what I talked about yesterday about not being a degenerate options gambler. you should not be going over leveraged in the options market during a pullback, hoping that we bounce just because that's what you're used to from the recent bull trend. Manage your risk very well. That doesn't mean you can't take long trades. I just got done telling you that's likely going to be the best trade coming up. But again, you don't need to be gambling on that with the options market. There's plenty of ways to trade just using shares. So really focus in on your risk management, because it's very hard to be a profitable trader if you're suffering large losses. And it's very easy to control your losses if you're managing risk, especially using shares. So watch these critical support zones. Understand we are very oversold within a bull market. And the only time you can be oversold is in a bull market. Just like I always say, there's no such thing as overbought in a bull market. There's no such thing as oversold in a bear market. Well, this is a bull market, so there is such thing as being oversold, and we are currently oversold. So look for those bounces, manage your risk around the critical levels, and you're going to do just fine. And start to hone in on the indices, because I do think there's going to be great trades coming up in them, especially now that we're heading into earnings season. So if you want to come crush the market and trade with me and get access to all of my intraday updates and trade ideas, then come join the Stocks Channel Discord server. And you can find out how to join the Stocks Channel Discord server by clicking on the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.